Today guys, a bit of change of scenery. We've swapped the suits for the shorts. It's a warm winter's afternoon here today. We're having a chat to the confident and charismatic Luke from the Moon Group, talking about all things finance and a bit of property as well. So let's go have a chat. Luke, thanks for joining us today, mate. Great haircut. Looks like we're going to the same hairdresser.
Mate, I did notice you're looking quite sharp.
Excellent, mate. Give us a bit of a rundown on how's business been for the last 12 months in regards to lending and finance. What have you noticed?
Mate, business is great. Last 12-18 months have been the busiest in my career. So yeah, definitely can't complain on that front. And we see a lot more of that. That's happening purely because there's just so much infrastructure being built and things are happening in Queensland in general. Okay. So really bullish on that for the foreseeable future. Excellent.
So with that being said, what are you expecting in terms of changes regarding lending? Obviously a lot of talk about interest rates at the moment. Yep. Are you expecting any changes over the foreseeable future, the next 12 months?
Yeah, mate, I think we'll see actually a bit of a tighten up. ASIC are really clamping down on banks now with interest-only loans and investment loans. Yep. They want to start seeing clients really reduce debts now. So in the next 12-18 months, I think that'll probably happen. Yeah.
Okay, great. Yep. Mate, should we go have a quick hit?
Yeah, definitely. Excellent. Let's do it.
Okay guys, obviously following up from a few videos previously, we're getting a lot of first home buyers talking to us at the moment. What advice would you give to a first home buyer that's looking to enter the market at the moment?
I would say, Geordie, before you go and talk to agents or jump on the web and find your dream home, I would say don't do any of those things. Talk to your local bank, talk to your local broker, doesn't matter who it is. Make sure you're organised. So you've got to have 5% at least deposit. Yep. Make sure it's little silly things. Make sure you've got an income to support those debts.
That helps.
And really get your ducks in a row before you start speaking with agents and looking at properties and stuff like that. Because you're just going to waste a lot of people's time if you're shopping in the wrong price bracket.
Yeah, great. Yep. Excellent point. Again, following on from that question, a lot of conversation at the moment around first home buyers and especially mortgage insurance. Yep. Can you give us a bit of a rundown on that and explain to people what it actually means and what it is?
Yep. So lender's mortgage insurance, or it's commonly known as LMI in my industry. So lender's mortgage insurance is basically anyone that borrows above 80%, they'll incur a lender's mortgage insurance fee from the lender. So it's basically a risk fee. So the bigger deposit you have, the less risk you are to the bank, hence the less risk fee that you'll incur. So 80% and below, no risk fee, no LMI, right? 80% and above, you'll incur that risk fee. So as the smaller your deposit and the higher your lend is, the higher your risk fee will be.
Makes sense. Yep. Okay. Mate, final question. Let's talk a little bit about property before we go. Mate, when are you going to fix your slice so you stop hitting into property?
What?
Tune in next week, guys.